Welcome back, Alpha Hunters. The markets are closed for the week of June the 9th, so let's do a little review. But if you haven't heard, yep, that's right, the markets have made their highest highs in over a year. So congratulations to those that have been riding the wave, but is now the time to go bullish or be a little bit more protective, possibly look for the downside. You know the camp I'm in. I'm still waiting, still being patient. We'll see what happens, but let's just dive into what went on this week. So Monday, not much really changed on Monday. You know, very subtle little gap up. Traded higher very quickly, came back down. A lot of that probably had to do with a lot of people seeing over the weekend. Oh my gosh, we broke out. We broke up above 4,200. We held it for the week. A lot of people came in and bought it into the market. So then we traded down and then very slowly climbed back higher by midday. And then we basically just sold lower than going into pretty much close. Tuesday, nice little gap down. And then we traded higher until about early midday. Nice little chop around session, then pushed higher kind of as we went towards close. So not really too much kind of was going on. And that was kind of the story for like Monday, Tuesday, Wednesday, Thursday. You know, it was a very subtle kind of kept trading within the range. So then on Wednesday, nice little gap higher, traded higher, and then sold off, got down to the weekly lows, kind of just hung out down here for the last second half of the day. Not really too much kind of going on, but just a little quick pop higher, didn't take out the previous high, just traded down, hung out down there. Thursday, nice little sideways move in the morning, quick little sell down, took the weekly low from Tuesday, and then traded higher until roughly about midday, and then had a little bit of a pullback and then pushed higher into the close. It was very important though on Thursday because this was actually the highest close that we've had over the past week, and it actually established, I guess, a technical new bull market, which was, you know, from close to close, off the lows in October to the close that we put in on Thursday, 20% off of that close bottom, but it wasn't the actual intraday low. So yeah, kind of an important close there on the day on Thursday. And then we saw everybody got the confirmation they needed to be bullish. We're in a new bull market, gap up, traded aggressively higher, very aggressively higher. First hour, a lot of tech stocks were moving very aggressively. But then after that first hour, we did see the market pull back pretty strong, get briefly negative there for a little bit, didn't really hold it, and then we rallied midday, and then had a very choppy sell down kind of into the close then on Friday, which formed out, we'll see here, a nice little upper wick doji on the daily. So we'll take a look at that. Another thing that's actually very important to note here on Friday is 41.73, basically the line right here. This was the high back in August. Okay, so that is where August topped out the intraday high, and then we rolled over then, you know, going into October. As you can see, we did not hold that, and that was where we basically wound up selling off. So it was a very important level for us to just trade. We went and took it, sold off. Yeah, it's a pretty important level that we took out on Friday. I was kind of hoping to see us do that next week, but we did do it obviously this week. So it is what it is, and we'll deal with it accordingly. Alrighty, taking a look here, sector rotation for the week, and we can see there was rotation all over the place all week. But we can definitely see that XLY, the discretionary part of the stock market, did really well. Obviously, a lot of that's been led by Friday's movement. And if you don't know really what happened Friday, it was a lot by Tesla. I'm not going to go into depth on Tesla in here in this video, but they made a deal with GM like they kind of did with Ford a few weeks back. So they got a pretty good uplift there. And Tesla has already been on a pretty monstrous run over the previous couple of weeks. So to me, it's just kind of in no man's land anyways. Like I couldn't touch it. All right. It's already been on its move. Either you're in it and you're loving it or you're not. But then we can also see the industrials, financials, and utilities were also outperformers on the week. So was real estate and energy, with materials basically coming in line with the market for the week. Now, you can see materials actually were doing pretty good up until Friday. So they had a little bit of a slip up there on Friday. And then some of the underperformers for the week, XLC, the communications area. So that holds mostly Google and Meta. Healthcare area, the XLV, with tech and staples being the two main underperforming sectors for the week. So with all the talk recently about bull market, and it's been led a lot by tech over the previous couple of months. It has. Tech has been running it, but we saw that switch last week, and we'll look at it here just a little bit later. Tech has been underperforming since about last Thursday. I believe it was last Thursday. We'll look at it a little bit later. So watch some of the switching that's kind of going on here as tech is starting to lead into that bearish direction. And if they continue to do that, it might just take the rest of the stock market with it. So the weekly Federal Reserve balance sheet update went a little bit higher, went about 1.2% higher week over week. Not much we can really do there, but they are still continuing to support the market. And probably a lot of this has to do with now that the Treasury can finally issue bonds again, and the Treasury is trying to bring in cash into its general account. The Federal Reserve is trying to kind of boost up, the market, trying to hold it together while, the Treasury does that. They don't really want to go through a catastrophic event while the Treasury is trying to rebalance its sheet, rebalance its cash positions and those kinds of things. So I would imagine, here as we go forward next couple of weeks, the Federal Reserve might start peeling back how much it is supporting some of these companies. The VIX. Wow. Well, we do know last week, towards the end of the week, last Thursday, Friday, the VIX got absolutely crushed. Continued into early this week, and then Wednesday, Thursday, Friday, for the most part, it's kind of flat. It stopped getting crushed as much. Yeah, not much really to say here, just absolute crush job on the VIX. This is like an all-time move, going from like under 17, like how fast it moved. This is a pretty rapid one. So we'll see what happens going forward. The DXY, the dollar index. So not much was going on here for most of the week. Kind of just had some wicks going back and forth Monday, Tuesday, and Wednesday. And then Thursday came and it broke down. It actually got below this low from last Friday, and we actually closed down there. Nice little like lower end on Thursday and Friday. Nice little buy up there on Friday. This one's kind of tough. It could very much easily be a double. People can kind of count as a double top. Nice little retest in a previous breakdown spot from back in March. So yeah, there's plenty of ways to kind of go about it, and I'd imagine the dollar's probably going to get its direction here for the next month. It's definitely going to happen this next week as we get CPI and FOMC. And another one that's probably going to get its direction here for the next foreseeable future is going to be rates. Looking here at the 10-year yield, yeah, we definitely have some pretty good activity of nice little, looks like a bottoming pattern, honestly. Looks like, 10-year yield might be pushing up a little bit more longer term that we've been forming out here. We'll see how it goes, but I would imagine we're going to get an indication on Tuesday, possibly Wednesday, really what's going to be happening with rates going forward. So I'd expect some volatility around rates and, bonds, especially this next week. Taking a look at that 10 and 2-year yield curve inversion. Nice little breakdown on Friday. Looks like it probably at least will come fill this gap. Probably happens early this next week. After that, because that was a pretty big gap that it had from back in March. We might see it start ticking up. So if it fills this little gap, maybe Monday, early Tuesday, I don't know. Do we start to see the yield curve start to climb back towards the non-inverted area? So that'd be interesting to see. Just be mindful that it's probably going to come down. I don't imagine it gets down and takes out the low that we put in back in March, but I would at least see it take out that gap that we had back in March. The GLD, the gold trust, really this can kind of go either way because it's going to depend a lot upon the dollar, but this was a very nice gap up that it had on Thursday. Now it had a lot to do because the dollar broke down for most of the night, Wednesday night going into Thursday morning. So that's why you had the GLD actually, jump up here right away Thursday. So it could be a nice reversal and maybe we'll start to push higher. But if the dollar does find support here and starts to push higher, gold could very much push back lower. So we're going to see how these two kind of work. Take a look here at the HYG, the high yield corporate bonds. Nice move lower on Wednesday. It was a very nice move lower. And then we got a response Thursday. Nice move higher on Thursday. Not much happened really there on Friday. Nice little upper wick. Took out some highs, but came back down. But man, you thought it was going to break down on Wednesday. I was kind of thinking, I was like, okay, maybe the HYG and bonds are going to start to break down. And then Thursday they responded. Nice close higher. So got a nice little bullish engulfing there. It's kind of difficult to say. I'm not going to really take a stab at really rates or bonds until we probably just see what happens on Tuesday and Wednesday. And then I imagine what we get coming out of Wednesday will be the direction, like Thursday and Friday, like those will be the two deciding days of kind of the direction that rates and bonds are kind of going to go. Taking a look at the LQD, same kind of deal. This one looks definitely a lot weaker than the HYG. So not sure what's going on between these two, but the HYG definitely looking a lot weaker. And we'll probably get a pretty clear indication of what's going to happen here this next week. TLT also nice little like hangout, at a lower end. Like I don't know, LQD, TLT not really doing it for me. Just they're not looking strong. They haven't gotten down to these levels, that they've put in some lows over the previous like 7 months or so, going all the way back to December, early March. So kind of like a wait and see. I mean, you could definitely, start accumulating positions here on the TLT here. And if it gets down here, definitely, snag up some more if it breaks down. I don't know. They're not performing as well. The HYG looks a little bit better. So that's just kind of my take on it. If you're going to go either way here, I'd be looking to be a little bit more bearish on maybe LQD, TLT, and then maybe bullish on the HYG. All right, taking a look here at week over week options change, and we saw quite a bit of call buying coming out this week for this next Friday, June the 16th. So yeah, a lot of people are bullish going into next week, and this might be a lot of people, maybe even feeling some FOMO, getting in on the action. Like, hey, the market's making highs, making new bull market and that kind of stuff. Headline traders, coming in and trying to get in on the deal and get in on the action. Other than that, though, we didn't really see calls being higher than puts going out through the expiration. So not too much really outside of the norm going on. A lot of puts coming in here on July 21st. But after this next Friday, that's going to be the next monthly. So I'd imagine probably going to start to see a lot more options start to pick up there. But it's kind of crazy how much the option volume or in totality has really dried up since about January. When we started the year, we had like January, February, March, April. I mean, these were all major months of options, right? And a lot of it was put options, right, in totality. So, basically with the line I'm talking about is the line here, the line chart, not the bars. So this is the total numbers. So it was just like when you got to all those monthlies, you were seeing just so much more elevated levels of put options. But now we're just not seeing that as much. We're starting to die off on how much volume's actually coming through. All right, take a look here at the Fed Watch tool. For this next week, we do have June the 14th meeting that we're going to be getting the interest rate decision. The market hasn't really changed all that much from last week. We're pretty much locked in, I believe, unless we get a really bad CPI number on Tuesday. It seems like we're getting probably just a rate hold at our current level. But as you go forward, it seems like we're starting to get a little bit more solidified, or there wasn't as much movement this week, starting to get a little bit more locked in. And with July being a 25 basis point increase, so that'll be interesting if that happens, because then we get to September and then we get a hold at that elevated level. And then November looks to be a rate reduction back down to our current level, the level we're currently at. And there is pretty good odds then another hold at the higher level in November. So we'll have to see what happens out that far. But December would be at least a hold back at our current level where we are right now. So over the previous few weeks, we have seen a lot of movement across a lot of the rate changes going forward for the next like 5 meetings, with the June, July, September, November, December kind of meeting and, some of those odds. But this week it kind of was a little bit more calm. It was like every day was kind of locked into like that scenario. So we'll see if that sticks this next week. Obviously, we'll find out probably pretty quick on Tuesday if the Fed's going to be locked in to just being a hold, or if the number comes in really bad from CPI, if it shifts dramatically over to a rate hike. Now, this is the sentiment survey that's put out by the AAII. If you don't know what that means, it means the American Association of Individual Investors, and basically they just do a survey, going on all the time. They, put it out from Thursday to Wednesday, and then that Thursday right after the Wednesday when the survey ends, they publish the Thursday morning. They publish the results. I don't typically care to focus on this all that much. I do keep my eye on it every now and then, and I will call out if there's huge changes like we saw over the previous week. So this came out this past week and Thursday morning, and you see the huge jump it had over last Thursday. Over last Thursday, a massive jump in the bullish sentiment. I mean, this is the highest level of 1 year bullish sentiment, highest level. So take that for what it's worth. I mean, we're hitting some pretty large extremes on some of the areas of the market that's been carrying us higher, and people are now starting to feel the FOMO. Now people are hopping in, and guess what? Over the past week, we haven't really gone anywhere on the market. And the headline right here on Finance Yahoo to end out the week: S&P finishes week at highest since August, enters new bull market. There you go, right there, front page news. All right, so last week I did mention that the IWM looks solidly ready for a breakout. Last Friday was definitely moving. Last Thursday, it was definitely moving. I was fully expecting kind of this price level, and this is kind of what we got this week. We had a very quick retest on Monday, and then Tuesday, this thing exploded higher. Continuation on Wednesday, and basically got to this level. Okay, so this is the kind of level I was kind of mentioning before, about the 185 to about the 187 type area, maybe even 188. Really, kind of these tops over here. That's kind of the area where you kind of wanted to be like taking it off if you were going to play this, because it was a huge air pocket here. And I mean, it found the air pocket and just took it. Then this week, it's going to be difficult for it to just keep skyrocketing right through this zone. Like if it's going to push higher, it's going to start to slow down very slowly, consolidate, grind higher. But that was a very strong move this week. And looking at the IWM versus the Qs, last Thursday, I did mention this. This looked like a huge change here as far as the IWM and the Qs relationship. And you can do it either way, Qs versus the IWM, it doesn't matter. But we saw the IWM massively outperform the Qs in about 2 hours last Thursday. On what day was that? The first? Yeah, the first. And then on Friday, the IWM just came out and smoked it the whole day, with, Monday being a nice little quick pullback, and then obviously Tuesday, Wednesday, you can just see how much of an outperformance the IWM had this week against the Qs. Now, Thursday and Friday, it gave some back. It was a huge move on the IWM this week. We saw it, especially on Wednesday. Just you can see just how much of a move, against each other it did have. But you can see Thursday and Friday, Qs kind of came back against it a little bit. Probably a lot of people trying to get into the hype train and get into the market. So the Qs this week didn't really do too much. It was a very quiet week for the Qs. Monday it didn't do too much. Tuesday didn't do too much. Wednesday it dropped pretty strong. Tech got hit very much the whole day, outside of I think about the first hour of the day. And then Thursday, nice little bounce back, and then Friday kind of completed the bounce back. And what was kind of interesting about Friday is it came and briefly took Monday's high, and then that was basically it for the Qs. It came back down, ended with a nice little upper wick there. So we'll see what happens with the Qs, but what I'm going to be interested to see here, I'm going to talk about this when I get to the SPY too, is this next week. Okay, so what I'm expecting this next week is Monday, we actually come out and sell down, and we break down pretty good on the Qs. I know kind of seems like crazy to think that, but I think it's gonna be pretty short-lived. I don't think it'll be long-lasting, mostly because I think people are gonna be bullish going into Tuesday and Wednesday, and maybe we don't sell down super hard on Monday, but maybe we gap down on Tuesday, and then it gets bought up as we go into the Fed on Wednesday, and we push up, but we do not take out the high that we put in on Friday. And then we start to reverse lower Thursday, Friday. That's what I'm going to be looking for. Okay. And a big reason why I'm going to be looking for that is because I want to see the switch happen from the market leader, which has been mostly big tech really over the past couple of months, right? So we do know that. We do know the headline bull market, the bear market's over, all that. We see all that. So now you're getting all the people that have been missed out, they're going to get in, right? So be a little mindful. Definitely watch the relationship of the market this week, especially between the Qs and the SPY. All right, so look at that nasty looking upper wick there. Now, not going to say that we don't take that out, but I do imagine this week we probably do trade lower just because we did get overextended. A lot of people probably flooded into the market and they're feeling a little like they missed out. So I'd imagine probably Monday we sell down. Maybe we don't close below the lows of this week, but maybe we kind of close kind of down there. And then maybe Tuesday, maybe CPI we gap down. But I would actually be very intrigued to see possibly if the market comes and fills this gap, but at least get down to about the 424 area. And maybe we do just trade down to there on Monday, but maybe we just gap down, right, on Tuesday with CPI. Maybe we just gap down and then we get a very strong push and close up into the low 430s on Wednesday. Okay, after the Fed. Maybe the market's kind of hanging around the 428 level. They announce a hold, the market loves it and pushes up, and maybe we close around 432, somewhere in there. And if that happens, I mean, you're going to see all the headlines. They will be everywhere. The highest close, the highest levels in over a year, right? And that's going to be 2 weeks back to back of like FOMO headlines, and that's going to draw in a lot of people. And then if that happens Thursday, Friday, I would expect the market to probably start to sell off. Now, I don't know if it'll be like totally wrecked, but I do want to see a scenario like that. I was really kind of hoping Friday wouldn't have done what it did, but it didn't. It is what it is. So I was kind of hoping to see, Friday's move this next week, and everybody would have been like, okay, there it is, back-to-back weeks. Let's get in. Headlines are all good. So, but we'll see what happens. That's at least going to be my game plan. I'd expect some early bearishness this next week, and then I'd be looking for probably the bullish play coming out of maybe Monday's like end of day, maybe before bearish Monday, and then possibly Tuesday's like gap down if we move bearish Tuesday pretty quick. I'd be looking to be bullish as we go into Fed day on Wednesday. If we do push higher and we close, 430 or higher, maybe up to 433, I would probably just be looking to be bearish. I will probably be looking to be doing a little bit of that as well, just adding to bearish positions. Not really digging it as much as, the headlines say. We didn't really do much this week outside of Friday, so we were just kind of trading that sideways range. But as far as this Friday high, yeah, this was the high that we took out from back in August. So last August was a high of 431.73, and Friday's high was 431.99. So we took it out by about 16 cents, and we actually had a new closing high as well, because I do believe that close back then was 429.70, and we actually closed today at 429.90. So yeah, a lot of headline bulls out there. That's about the best thing I can say. Headline bulls. So we'll see what happens, but we are starting to see that rotation kind of out of tech. So continue to kind of watch the relationship, because this is a very key level, very, very, very key level. So just be mindful of where we are in the marketplace and where we can go from here, possibly to the downside. Alrighty, take care, Alpha Hunters.